Hi, my name is Karina. I purchased my first real estate investment property June 2021. It's a 12-unit apartment building in Baton Rouge, Louisiana. From the beginning, I've had nothing but problems with my property management company. And every month it seems like I'm just making sure there's enough to cover the mortgage and insurance. A lot of it has to do with, I think, there are repairs around the building that I'm trying to improve upon that were not handled by the previous owner. Also, the property management company has left vacancies go for too long, and they charge crazy fees every time someone needs maintenance or I need a quote for something. I just want to be making a profit on it instead of worrying that I have enough to cover the mortgage. What advice can you give me going forward on this? I am in the process of looking for new property management, and or should I just be grateful that I have acquired this property and that I'm at least making the mortgage and insurance every month? Thank you.
Thank you, Karina. So, okay. I don't want to turn Karina here into a cautionary tale, but boy, as she was talking, I was thinking of a whole bunch of examples that I think we could all learn from. Okay. So we'll get to those learning bits in just a moment. But first, yes, let's just be grateful. We should all be more grateful. Things are really difficult for a lot of people right now. Really, and of course, when you have these global elites like at the World Economic Forum trying to consolidate power and take your personal assets away from you, which is what the World Economic Forum wants to do, these unelected elites who want to take things from you, and they are consolidating power right now to do that. And we see food shortages and high gas prices and inflation at a 40-year high in the United States, particularly. It's tough for a lot of people, right? And so real estate investing is still the number one way to build wealth and to preserve our wealth. And so we should all be grateful, Karina, especially if you've got this 12 unit, you're breaking even basically. And these tenants are actually increasing your equity position. So gratitude is always a good thing. And, I just want to start off by saying my son for Christmas got me, with his own money, he's 11 years old, he bought me a journal. It was made of this like really special paper. It was like from Africa or something. It was really special. And it had my initial on the front of it. And he gave it to me, and it's got 200 pages or so inside of it. I said, I'm going to turn this into a gratitude journal so that I could sit down, not every day, just every, when it strikes me, and just write something in gratitude in the journal. I'm grateful for my children's health. I'm grateful, whatever it happens to be. Just putting those few things down on paper every morning really sets you up for success, and you attract more of that into your life. Absolutely true. So you should be grateful that you've got a 12-unit property, that you're not underwater in it. You're actually producing income, and you are building up an equity position on, tenants are paying your rent and your mortgage, or paying their rent, and which pays your mortgage and increases your equity position, also increases your overall net worth. So let's just start there with gratitude, okay? But the next piece of that is that remember the 3 stages of real estate investing. Gary Keller's model in his great book, The Millionaire Real Estate Investor. And one of the things he talks about is the buy, own, and cash flow, right? Those are the 3 stages. Buy a property, own a property, cash flow a property. And so what I mean by that, or he means by that, is you buy it, right? So you're using other people's money, you're using a bank's money. So you bought it, okay? Then you pay it off. Could take a number of years, and your tenants are paying down this bill, and then you own it, okay? Then you cash flow. And that should be later on, down the line. If you're just starting out, you really shouldn't be focused on the cash flow piece of this just yet. And I know it can be alluring, and that's one of the reasons why we do this, is the cash flow, but you're forgetting about the incredible benefits to your taxes and your overall net worth. So you're adding to your balance sheet, you have an amazing tax shelter. The cash flow can come later, because here's the cash flow creates a new problem, right? That's income. So now you're going to need to offset that income with some other, debts, right? You're going to have to offset that income with something else, another real estate purchase. And that's down the line. So again, I come back to you will buy real estate until you die strategy. Buy until you die. The reason we say that is because you once you start, all of that cash flow becomes income, and then you're taxed on that, and that creates a new problem. So you're not at that problem yet, right? Because you've got repairs and you've got other issues. So this brings me to sort of my cautionary tale, and I don't mean to call you out in this way, but I think it's a good learning experience for others who are listening to hear kind of what you've gone through. Number one, it sounds like, I'm just going to throw this out there, maybe this isn't the case. You can totally call me back and disagree with me. It sounds like the property management team wasn't properly vetted. And I can tell you that that is the most important piece of the entire puzzle. That's why we have full videos on our channel about property management and how important it is. So I'd encourage you to go watch those videos, especially if you're on our YouTube channel. Go check those videos out. And you can actually meet one of our property management teams that we work with in our Texas market, and they're fantastic. So there are going to be a number of questions that you're going to be asking property management companies, and we go through that in that video. But I'll just give you a few rundown here, like a few of the items here. How do you communicate with tenants? What type of software do you use? How do you do background checks on tenants? How long have you been in business? We don't work with any of them that have been in business for less than 5 years. So there's a lot of questions that we will ask. How many doors do you manage? If you're overly saturated, then we probably won't be working with you. So there's a lot of things that we'd be asking property managers. Now, the next step is, I'd be shopping around looking at other property managers. And based on those questions that we have in our video where we walk you through in detail those questions, make sure you come armed with those questions for your new property management company. The next piece of this is, yes, property management is incredibly important. And I would rather wait on putting a tenant in the property than just shoving any old person in there. So sometimes, I work with great property managers. Sometimes they'll take a month to 2 months to find a great tenant in the property. And that's just sometimes how it goes. But I'd rather have that wait and find the right person who's going to stay for 5 years or longer than rush to stick a tenant in there who's going to move out in 6 months or a year because they were the wrong fit. And then, the costs on doing a tenant turnover, that's where you're going to end up paying the most, is on a tenant turnover of a property. So I'd much rather have somebody there for a long time. And I'm willing to wait a month. I'm willing to wait 2 months to get the right person in that property. So again, property management, it sounds like maybe you didn't vet them properly, and now it's coming back to bite you. However, there also seems to be another piece of this, which is a number of repairs. Now, it seems like maybe you didn't get an inspection because all these repairs are popping up now. And when you were buying the property, we always encourage all of our clients when they're buying a property from us, get the full inspection, work with a third party, get appraisal, the whole thing, and the whole 9 yards so that you see everything. It's like, especially with our properties are all new construction. So there's not going to be the types of repairs or anything like that you need to worry about. But when you're buying an older property, absolutely. Now, I know given this crazy housing market that we were in last year, there were people waiving inspections. No, I'll just waive an inspection so I can be the one that buys the property, which is crazy if you're getting into the investment game. Now, if you're BlackRock or some big hedge fund and you don't care because you're going to go in and you're going to totally gut the place anyway, then you don't care about an inspection. But 12 unit, that's definitely due diligence that needed to be done. So if all these repairs are popping up, I'm just curious, what types of repairs are they? Are they things that should have come back on an inspection report but didn't? That seems fishy to me. The third part of that is, if you're buying a commercial building, which I don't do, I do residential. So I do one unit, 2 unit, 3 and 4. Those are residential. Anything above 4 units is considered commercial. So you did a commercial building. Buying those properties, the way that you add value, when you invest as a commercial investor, all the commercial investor friends that I have, their goal is always, how can we add value, a value add to the property? Therefore, we can force appreciation and raise rents, etc. Right? That's the goal. Because when you're buying a 12 unit from someone, you're buying it from an investor. You're not buying it from some, mom and pop investor out there, right? You're buying it from an actual seasoned investor. You probably bought it from he or she from their LLC, right? They bought it as a business. So chances are they did a value add on this property already, were able to raise rents to a sufficient level. Now you as a commercial investor have to look at this and say, how do I add value? Do I add a courtyard or common area, a TV room, a ping pong table, on-site laundry services or something? Those are all things that commercial investors are looking at. What can they do to add value? How can I upgrade the units so that I can demand a higher rent, add a doorman, the 24-hour door, whatever it is, right? These are all value adds. So maybe there wasn't sufficient room to do value adds on this property. Or maybe there was, and this is all questions I have about this, but it seems like some of these repair questions could have been addressed in the inspection phase. So now I'd be looking at maybe, Karina, like thinking about how you can, start to add value to this property. And if you have the resources to do it, maybe this wasn't part of your thought process at the beginning. Well, it's never too late. Maybe now it's time to start thinking about how can I add value to this property to not only take care of these repairs, but maybe increase the rents, start to bring some profit in on this property. So, but again, I come back to the gratitude thing. At the end of the day, you're breaking even or right around that. You've added to your net worth. Okay. You have an amazing tax shelter. And at the end of the day, you've got expenses on your business. So these are write-offs to offset your other income from your day job. So these expenses that you're experiencing right now, having to do some fix up and repairs, those are all expenses for your business. That's the way I always look at it. I'm always a glass half full kind of guy. So that's what I see when I see these types of situations. Okay. At least you're not underwater and you're building up equity. So thank you so much for that question. Thank you to all of your great questions. You can go to our website, morrisinvest.com, click on the microphone icon and leave us a 30-second voicemail question about real estate or whatever else is on your mind. Now go out there, take action and become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time.